home builder Toll Brothers aren't in the green, up better than 1%, but off their highs after it beat on the top and bottom lines, raised full-year deliveries and pricing guidance. Joining us now is Alan Ratner of Zelman Associates. Alan, good to see you. So EPS, a nice beat here. Revenue is just a little bit better than in line, but demand optimism in this release. What do you think?
Hey, John, thanks for having me. Yeah, a bit of a mixed quarter. This is the 3-month period ending July when we know demand was a bit softer. Rates began to move lower towards the very end of the quarter. So we were, about 10% below consensus on order growth, and the results pretty much met our expectations, so a bit weaker than consensus. But the commentary was positive. Management indicated that July was their strongest order month of the quarter, and they're encouraged by what they're seeing so far in August.
How will slightly lower short-term interest rates affect the home building industry and a player like Toll Brothers? I mean, they've been able to, in a supply-constrained environment, offer incentives that make their offerings arguably more attractive than historical relative to existing homes.
Yeah, so rates are down 50+ basis points from the recent highs over the last month or two. Clearly, lower rates are a good thing for affordability, for demand, but we haven't really seen it show up yet in the order results. I know the commentary was more positive, related to August activity. So we'll wait and see what management has to say about that on tomorrow's conference call. But I think there's still a lot of expectation that rates are going to move even lower later this year once the Fed actually does cut. I'm not sure that's the correct interpretation because the bond market's already pricing in some magnitude of cuts. But the consumer out there today, we're hearing, is just reluctant to move forward if rates are, in fact, going to be lower a few months from now. So we're still seeing some sluggish activity.
So how much upside is there here?
Well, from a stock perspective, we like Toll Brothers. We think the upside has less to do about the near-term demand and more about what they've been doing from an operations standpoint. They've been buying back a lot of stock, and they've been doing a lot of things to structurally drive their ROE higher. But in the near term, we do think that the demand outlook is going to remain choppy.
What distinguishes the players in the home builder space here now? Is it their regional activity? Is it types of homes that they're building?
Yeah, I mean, there's a lot of different strategies. There's price point differentiation. There are builders that spec more, meaning they're competing directly with the resale market versus those that are more built to order. Toll has been speccing more, but they predominantly are more of a move-up builder. Roughly half of their business is built to order. So there's different ways to differentiate. There's strengths and weaknesses, frankly, across those various differentiating points. Geographically speaking as well, we're hearing some softer activity out of Florida, out of Texas. A little bit better activity in the middle part of the country. So, lots of different ways to differentiate right now.
So who's advantaged from a stock perspective in the middle part of the country where things are looking a little stronger?
Well, Toll Brothers has a pretty attractive footprint in the sense that they're diversifying outside of the coasts. MHO, MI Homes, is a large Midwest builder. They've got a strong market share in the Midwest. And, I think generally speaking, we tend to differentiate more between the return profile of the builders as opposed to anything overly geographic in nature.
What are you seeing in consumer credit and how that's affecting these different builders depending on what segments of the market they appeal to?
Yeah, we're definitely seeing more stress at the entry level. Credit card debt is rising. We're seeing tougher ability to qualify for loans. So that's directly impacting the entry-level builders, the D.R. Hortons, the Lennars of the world. The good news is that these builders have above average gross margins, so they've got some cushion to play with to buy down the rate for the consumer and help that buyer qualify for a loan. But we definitely are starting to see some signs of stress on that front.